Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of BTC, taking a look at what's been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and you will stay up to date with all the videos that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Okay, let's get right down into this one. USDT and Bitcoin pair here on the hourly chart, and Binance is our data source. Now, following on from yesterday, I was expecting a move upwards towards our liquidity between 23,003 and 23,005. And as you can see, obviously we broke down out of our higher highs and higher lows. Okay, so we were expecting the breakdown, but I was actually expecting it to happen after we pushed up a little bit higher. The deviation here isn't terribly too unusual, but we have got some interesting shifts with the momentum indicator, the oscillator down at the bottom here, the Cheeky Crypto SRSI, which gives us multiple time frames on the stochastic RSI, right? And we can see that we're moving up quite a bit after coming down, reasonably as well. So we're kind of hitting the same kind of levels here, although we've got a lower high. Okay, so it's interesting to kind of see that there's a slight bearish divergence here as we potentially now come up back to the overbought area without breaching this higher high up here. Okay, so interesting, shifts when it comes to the momentum indicator. The 4-hour is oversold and the 8-hour is oversold, so there's still progression to the upside to be had on those smaller time frames, but don't expect anything too much, I don't think, if we are starting to see wavering in the space. Now, let's actually break this down a little bit, right? So our C wave is still technically valid, and our B wave would be down here, meaning that our C wave shouldn't really peak terribly too much higher than our white line at 23,180. But it doesn't change the fact that our order block is still up in this area, and it doesn't change the fact that our liquidity is here either. Okay, so we should be aware that this is an interesting area from a kind of market maker and liquidity hunter perspective. Okay, so if someone's looking out to try to kind of get maximum amount of bang for their buck and trying to push the price towards this area is kind of where they're going to get it. So kind of keep an eye on that. The area hasn't been hit yet, so it's still a very valid area for supply. Okay, this is where the sellers are going to be. It's also where a lot of liquidations will occur. Okay, this is 23,332 to 23,536, if I can get my words out today. So the move to the upside potentially could take us up there. So let's go ahead and come into this, right? If I grab this white line that we were using before, move it down here, you can see that we did not pierce this low level. Okay, this is 22,292.37. Okay, so we actually came down to a low of 22,300 to the penny because Binance loves that. Therefore, if we were to take a consideration of thinking about this as a one-to-one, potentially even push up a little bit higher to the 1.236, it gets us right into our little box here. You can see that this would top out at the 1.382 as well. So that would be a really interesting kind of area to think that this C wave here may come up into that range and get absolutely smacked down from there. You can also see that the 1-to-1 ratio is pretty much exactly on 23,180. Okay, that's because we've come down pretty much down here. So it's a ranging market. It's ranging between these two levels, the two white lines, if you will. We do have that higher wick up here as well. This is where the liquidity sits. As you can kind of see on this green line right here, this is where the liquidity sits because people like to use these swing highs as their stop losses. And that's kind of how the indicator is working. So when we start thinking about that, that's going to be meaning that we have got this potential move to the upside. But I am concerned about our hourly chart. We can't move in straight lines by the looks of it. We're going to probably correct down a fair bit before we kind of move in this general direction to the upside. Invalidation of this move would of course occur if we do drop down lower than 22,292, and so keeping a close eye on that. Now, from our weekly standpoint, we can see that this is an area that would coincide with our 200 EMA. You can kind of see it right in here, the white line. Our 50 EMA does look like it's still coming down, so it looks like we eventually will have this death cross in a few weeks from now. And this is going to be where the major area of resistance is. Like I said yesterday, we've moved up quite significantly, 51% or so. We want to be thinking about locking in some profits because you cannot move up in straight lines forever. We have got, of course, an overbought stochastic RSI here, and I am concerned about that. I do think we're going to come down quite big like we have done before, so just can be really, really cautious when it comes to our weekly time frame. The other thing that I wanted to spend some time talking about was going to be the Wyckoff accumulation pattern. Lots of chatter out there saying that we've had the spring event. I would beg to differ. I cannot see how we've had a spring event here when we start plotting these out. If we take the high from 2021 up here, and we come on down, a lot of people will start thinking maybe, if I actually draw this up here, right, take this schematic up here, right, people will be thinking, well, maybe down here, this is our selling climax right here, okay, and then we rally on up into an automatic rally right here. We then have a secondary test right here, and then we have that resistance line hitting right up here. Right, and they basically look at it like this. Then where would be our secondary test in phase B? Where would that be? Right, it has to come down lower than the selling climax, so it'd have to be just over here. Okay, so that there would have to be our selling climax, which means this move upwards in phase B hasn't occurred. In fact, we failed to even come higher than the selling climax after the secondary test in phase B and fell down even further. So no spring event could have possibly occurred, right? So I think it's important that we kind of look at these and reflect on these and try to kind of, draw them out accurately rather than just kind of, saying random things that these things are occurring when they haven't. In terms of schematics, the only way I can even get this to loosely fit is down where we are right now, selling climax being over here on the 18th of June, the automatic rally coming up, which would have been kind of towards the end of June, 26th of June, 27th of June, secondary test coming down at the 1st of July, then we come up into the resistances, then we're pulling down, secondary test being November 2022, up here now above the automatic rally, right? So this bit in phase B right here, okay, this, where we are right now, would be above the automatic rally, but not above the previous high and the previous resistance line. Okay, that is where we are right now. Then we've got to come down, and there's two schematics because you don't always have spring events, okay? This is why I'm saying that the bottom could be in, but it also might not be. It all depends on where the money is. It's a manipulation pattern, so essentially the price is going to move to wherever the most money is going to be made, right? If that happens to be down lower, then that's where they're going to take it. If it happens to be up higher, then there's going to be no spring event. It's all about grabbing the liquidity, okay? So when we start thinking about this and we start coming down, one of the things that we're looking for is, are we going to go down lower than the secondary test after the automatic rally? That is this dashed line down here at 18,626. Okay, so if we come down lower than that, then I would say spring event is likely to occur. If, however, we find this as support, then we're following the schematic number 2, and actually we'll be moving on out of here with no spring event. Okay, so keeping an eye on this, I'm going to keep everyone up to date as this pattern develops. No guarantee that it even plays out. As I said before, right, it could have been that this was going to be our secondary test in phase B and we should have rallied on up, right? Didn't happen though, did it? So we are where we are. So we want to kind of focus on what this is actually telling us and all that kind of stuff. So keeping a close eye on it. Alternatively, I guess you could try to really make a small, minor accumulation pattern somewhere and try to make out as if this is the spring event. So you could cut this out and say, look here, over here in September of 2022 is a selling climax, our automatic rally, and then some kind of secondary test in phase B, maybe somewhere in here. Like, you could try to make these kind of real minor movements fit this, maybe go down to a 4-hour or an 8-hour chart. But from a daily standpoint, this is the only way I can look at it. I can't find any other Wyckoff way of making this fit, like the Wyckoff pattern, make it fit into our daily chart. So it is what it is, and it simply does, to me, tell me that I am likely to see retracements to the downside, which coincides with what is going on with our weekly time frame. We are thinking that there's a likelihood here that we're going to get rejected and we're likely to move on down. Okay, and that move to the downside should hopefully come down quite nice, take us into at least the $18,600 range, and we'll have to see how it reacts to that secondary test within phase A. Okay, so we'll see how that kind of works out, and if we do lose it, then we'll look forward to some lower lows. if we are following the Wyckoff accumulation pattern. Don't have to, of course, there's plenty of other ways of looking at it. I personally do think we are going to come down into lower lows based on Elliott wave theory. I would say, yeah, we're probably going to be looking at moving down towards the kind of $13,000-$14,000 levels, but we'll see how it kind of goes out. In terms of Wyckoff accumulation, though, I'm going to keep a close eye on it. I'll keep everyone informed as to what I think is likely to occur with this pattern and any potential concerns to say we're not following it and all that kind of wonderful stuff. I'm going to leave this video right there, though, guys. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done, out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.